We have Duncan with us again today, our loan originator and president of Infinite Financial. Thanks for being here again today, Duncan. And you know, I know you were a Punahou graduate, and Punahou, of course, has been in the news with the Olympics lately, which has been amazing. And you're also a graduate program at the Wharton Business School, and such an amazing background, and especially being a mortgage broker to educate people from a very technical standpoint. And this week it was funny, you know, I love to educate people on what's going on, and a quote that I saw that was very appropriate for today was that an investment in knowledge pays the best interest. So I'm hoping with that, or your wisdom and knowledge in the mortgage business, you'll be able to update. We had you on 4.5 months ago, and now it'll be great to see, you know, what happened, where we're going, and so people can plan accordingly. So on that note, you can take, if you wouldn't mind, you know, where are you seeing luxury mortgages go right now?
There's some changes in the market. Last time we talked about appraisals taking a long time, and they still are taking a long time. A lot of appraisers have chosen not to do on-site appraisals, inspections, because of the COVID, and with the case counts coming back up, there's still a lot of appraisers not willing to do that. Hopefully that will change. There's still a very high volume of purchases and refis with rates so low. And with prices higher, we don't get as many appraisal waivers, since there are no appraisal waivers when you have over $1 million properties. And there's a lot more properties that are over $1 million now. So that makes a combination of everything makes it a lot harder to get appraisals done quickly. Sometimes we're able to get them done pretty quickly, but sometimes there are some longer appraisal timeframes, especially on more rural and complex properties.
Are you finding the appraisals are coming in at sales price or above or below, you know, given that it seems like every new sale is a new price for that marketplace? You know, how are the appraisers keeping up with that?
It's been a mix. We've had some above, some but we do have some, you know, like in normal markets, sometimes the appraisals will come in low and will adjust appropriately. The issue with appraisals is you have to use past closed sales, and a lot of when you have an increasing price market, then you're going to get some sales that are not closed yet that will increase the value, and some, you know, it takes 30 to 45, 60 days to close on the sale. So something might be in escrow, but normally they're not allowed to use that to justify the value until it closes. So if things are changing rapidly, then that can be an issue. It's been pretty stable the last couple of months, so that's not so much of an issue. But a couple months ago, I think it was more of an issue with appraisals, not having the closed sales to justify prices.
And as far as interest rates, what what is the threshold that classes a mortgage as luxury, the amount, and what are our interest rates looking at right now?
Currently, the max conforming loan amount is $822,375 for the state of Hawaii. And anything above there is considered jumbo. And the rates for jumbo are higher than for conforming loans currently. A couple of years ago, it was actually the other way around, where the jumbo rates were a little bit lower than the conforming loans. But right now they're higher. So we're sometimes when they're close, we're using a second mortgage or piggyback HELOC to allow customers to use a conventional loan, a conforming loan for the first mortgage, rather than using a jumbo, so they're able to save on that rate. Or sometimes we'll do that to allow a customer to buy with a smaller down payment. We just had one that closed. It would have been a jumbo loan, but we used a piggyback HELOC to fill the gap, and they were able to buy with 5% down on a $1 million+ property. And we actually just did one with a VA loan too, where it was over $2 million, and they were able to buy with 5% down using a piggyback HELOC to help out. So there's some creative things that we can do to make things work, and so that cutoff is $822,375, much higher than it's been in past years. That's gone up, and so that probably contributes to more people being able to qualify for higher price places, especially with lower interest rates. And then rates have been fluctuating near the all-time lows, so it's a great time to buy from a financing perspective just because rates have never been much better than they are now.
And why don't we talk about the, the bridge loans, and you talked about DCR loans, et cetera, and bank statement loans. Give me an idea of where somebody may use those type of loans.
Yeah, when you have some buyers that don't qualify for a normal conventional type of loan or a regular jumbo loan, especially on investor loans, there are some what's called non-QM products. And non-QM lenders, it's actually a growing part of the market. Last year with the shutdown, the non-QM market basically shut down, and all the private lenders or the lenders that focused on these out-of-the-box type of loans, they weren't doing any loans. And so it was really hard to do them. Now they've come back with all the money available. There's a lot of investors looking to fund purchases. And so there's a lot of non-QM loan options for people that don't qualify under the normal rules. For example, a DSCR loan is an investor loan where you can qualify just based on the income of the property, the rental income. A bridge loan doesn't need income verification either. And so those are a couple loans that we've done some recently. And we even have a loan where a borrower can buy, if they have at least 25% down, they can buy with no income documentation at all for a primary residence. And so that's something that I don't think any other lender in Hawaii has that, but we're able to do that. So for a first-time buyer, they have to put at least 30% down. So that's where the lenders mitigate the risk. But it's something that can allow people to buy where they otherwise can't buy. So there's a lot of different solutions that we have for people that can't fit into the traditional box. The rates are higher on those types of loans, but if you need to get a deal done, then it's something that really can help.
From personal experience for myself, that's fantastic, because I deal with some retired investors, and they don't have the income, but of course they have the cash flow from properties. So that's a perfect vehicle for that. Yeah,
we have different ways of creating qualifying income that other lenders don't really know how to do. So there are usually ways to make things work. There's a lot of different things that you can do as a lender.
So how do you personally keep up with all these different programs that are available? Because I know when I talk to you, it's kind of exciting. You've always got a solution, and it's like, oh yeah, we could do this program, we can do this, we can do that. And how do you keep up with all the changes?
Well, that's part of the job, is keeping up with all the different lenders, all the different products. And in my free time, I'm on these different forums with other brokers nationwide, and we're able to share tips on different ways to do things. So I always have a thirst for knowledge, and I'm always learning. And that's the great thing about this business. You never know it all. There's always new things to learn, and there's always more to learn and find out about. And the other thing is I deal with a lot of different customers with a lot of different situations. So I'm forced to have to research and find out the best solution for the customer situation.
No, it's wonderful.
Yeah, it's a really enjoyable part of the job where you're able to, I'm a problem solver, and I like finding ways to solve the problems. And that's something that I have to do a lot.
Well, I've been in real estate since 1989, so I'll give away my age here a bit. But one of the things that very few people like yourself really go that extra step and really enjoy the learning process and knowing everything out there and being educated on a daily basis. And I know here at Columbia Realty, it's all our agents are that way. It's like we're constantly being educated all the time, which keeps us up with trends and keeps us current for clients' needs, very importantly. Let's talk about credit score. I know you've worked with a couple of our agents that are working with their clients and getting their credit score where it needs to be on some of their clients. What would you suggest for someone to do, to really start working on what they can afford to buy, where their credit score needs to be, etc.?
Yeah, I think that an important thing is that they make sure that their credit is the best it can be when they do apply for a mortgage. Sometimes I'll get people looking to buy and they're not ready credit-wise, and there's some simple steps they can make. And if they had prepared a couple months earlier, then they'd be in much better shape. So I would, there's a lot of things they can do. Primarily, first thing is to make sure they pay all their bills on time. And then if they don't have a good credit history, there are different ways that they can build the credit history. And I'm happy to advise customers on some ways that they can do that. And there's a lot of different things, depending on their situation. There's a lot of different things you can do to improve your credit score. There's a lot of people with great credit, but there's a lot of people that definitely need help and can really improve their credit with some simple steps before they go to buy a place.
And I think very importantly, that's all walks of life. It can be a first-time buyer. It can be somebody who's, later in life. You probably get a lot of different people at different stages of life really needing to look at their credit report, correct?
Right, exactly.
So what about, you were mentioning before we started the program this morning about VA loans, which of course is the veterans loans where you can put very little down. And you're mentioning that now they can increase their buyer's power by having a non-veteran person. So that sounds really interesting.
Yeah, we recently closed a loan where we had a veteran and 2 non-veterans, and veterans don't have to put anything down on a purchase if they don't have any other VA loans currently. And the non-vets, when you do a joint vet non-vet loan, the non-vets do have to put 25% of their portion of the purchase down. So in this case, there were 2 non-vets. They had to put so basically a total of 16.67% of the purchase price down. And we used a piggyback HELOC so that was reduced to 5% down. So that allowed them to buy an over $2 million property with 5% down using the VA loan. And the veteran wouldn't be able to buy that property by himself, and neither would the other 2 non-vets. So combining their buying power, they're able to buy a much higher priced, a luxury property that they otherwise wouldn't have been able to. But using creative financing, we were able to do it. And the buyers, sellers, everybody was happy in the end.
Very nice. And then, of course, the magic question is, where is interest rates going the next, between now and the end of the year? Where do you, I'll put you on the spot there.
Well, you never know what's going to happen in the short term. Longer term, I think everybody believes and knows that rates can't stay this low forever. And so longer term, we know rates are going to be higher. Shorter term, you can never tell. We've only got a few months before the end of the year. Kind of depends what happens with the Fed. They can't go much lower. So if one thing that people will look at is if the Fed kind of indicates that they'll be tapering on their purchasing of bonds, which the Fed has been intervening in the markets and keeping low rates kind of artificially low, and they can't keep doing that forever, running up the deficit. So that's something where there's probably going to be tapering of their intervention and rates, long-term rates going back up. Just timing wise, we don't know when that will be, but sometime in the next few years, rates are likely to move back quite a bit higher. So that's another reason that you've had a lot of demand, because people know that rates aren't going to stay this low forever.
Exactly. Well, Duncan, thank you for your time today. It's just fantastic, to get updated with so many changes in the mortgage business over the last 4 months since we spoke last. And like at the end of every Friday, we have Mary Ann's Photos, who's kind enough to share her amazing photos with us. And today we're going to be celebrating Diamond Head. As we know, we have the Transpac races, so there's been a lot of people up there at the Diamond Head lookout. And of course, this photo shows the slopes of Diamond Head and beautiful exclusive homes and estates, dotted along the coastline there. And our next photo here, I'll just pop up, is, just sapphire and turquoise waters. I know Doug and I love to walk around Diamond Head and just really enjoy the colors of the water and the surfers, and you get the kite surfers out there, and it's just amazing. And then you may see this. Where is the red buoy? Can you see the red buoy out there?
I see it.
You can see it. And here it is here. And, this was used, for the finishes of the Transpac race from California to Honolulu, which was over 2,000 miles. So I'm sure they like to see that little red buoy out there. And then, of course, the famous lighthouse that was built in 1899 and sits about 147 feet above sea level, and the downwind sailing. So on that note, thank you for being with us today, Duncan, and thank you for everyone who joined in to listen to such fabulous information on the mortgage business right now. And have a great weekend, and until we speak next, much mahalo. Aloha.
Aloha.
Aloha.